Good afternoon, everyone, and welcome to our Trending Thursday on YouTube Live. Live from YouTube, it's Trending Thursday. And everybody's got to clap and go, yeah, yeah. Good afternoon. My name is Glenn Tompkins, Senior Instructor here at VectorVest. It's my pleasure to be here, and I'm glad that so many of you guys are here as well. Thank you so much. And if you feel compelled to, by all means, please chat in. The interaction is what makes life interesting and fun in these presentations on YouTube. We've just recently moved over to the YouTube platform. We're going to grow it, and I'm going to need your help to do it. So as we go along, like, share, subscribe to the channel. If you haven't already subscribed to the channel, take the time out to do that right now. If you have other people in your sphere of influence, that's a good word, I like that. In your sphere of influence, share it with them. All right, let them know what's going on, help them to let them know what's going on in the market, and of course, like it. All right, another thing that I'm really trying to get you guys to do, when these videos come out of the Trending Thursdays, comment on them. Comment that you like them, comment what you would like to see go on with them, but no matter what, even if you comment to just say hi, comment on them, because other people who are not subscribers that are watching these videos, I'd like them to see what you think about the software. You could be the difference in bringing in a new subscriber to the VectorVest software. So think about that for me. When you see these videos, when they get posted, when Joey puts them out, comment on them. Again, I don't care if it's just a hi or, hey, VectorVest is okay, or VectorVest is great because it's made a difference in my life and my trading, or VectorVest could use some of these other things. Well, I don't care what it is. Comment on the videos, and I will take the time to try to answer any of the emails or any of the comments that are addressed to me specifically. I will do the best that I can to answer them personally and start a thread. I really want the people who are not subscribers, who are going through these videos as a possibility of looking at the software, I want them to get a feel of what you think the software can do for you and has done for you. So make that a priority for me in regards to helping to grow this channel. Comment on the videos, do that. And the biggest thing is, if there's something that you'd like to see, don't be afraid to put it out there. You guys have a voice. I'm going to make sure that you have a voice. Put it out on these videos. All right, so with that, let's see who's here. Jay is always here. I don't care if I'm doing a video at 3 o'clock in the morning. I think Jay will be there. So I always thank you, Jay, for doing that. For doing that. And again, you're going to get to see his type in the room. You can get to see how cryptic he can be while I have to deal with in the Jockey Club every morning. Good afternoon, Tom, who's Badger. He's my guy that's out in the sticks with the fainting goats. So, hey, Jay, I need to get some typing lessons from you. It's hard to keep up with your pace, you said. Good afternoon, Joff. Good afternoon, Jake. Who else is here? Mendy. Who's the Nightbot? Is that our bot? That's like the other bot? All right, so the bot talks to people? All right. Much better stuff. Oh, man. Leave Mindy alone tonight. Man, what is that for? What did she do? Man. Okay. Mendy says, Glenn, you're an internet sensation. No, I'm not. I'm just a guy who loves the software and is trying to get other people to get the same passion for it as I have. I am not an internet sensation, not at all. I love doing this stuff, and hopefully it comes across to you guys. Kirby said, I made it thanks to your reminding me this morning. Oh, see, so Kirby, I reminded you, so thank you for being here, Kirby. Jay says, Jay's talking to Kirby. Devin, what's up, Devin? Just to let you know, sitting to my right side saddle is Joey. He's my producer. Say hi, Joey. Hi. There you go. He's a man of little words. He's a man of little words. Not comments. Look at that. Look at that. See? See what he's typing in the room? Not, what does that say? The contest this time around. Oh, is that competing? All right, not competing this time around, trying to spend some time to learn options. There you go, and that's a good way to learn. Subscribe reminder, what does that mean? Can I show that? I want to show that. Yeah. All right, show that. Tom said something, subscribe reminded me. See, there you go. That's why I say If nothing else, subscribe. You will get updated on when these videos will show up. All right, Badger says, I liked and told Jay all the guys down at the bowling alley to come and learn from you and Joey. What a knowledge lunch. Low in sodium and calories and high in brain fiber. Way to go, Tom. All right, we got a lot to cover today. So the software I'm going to be using for those of you who may be brand new is VectorVest. VectorVest has been around for 30 years. It is a stock analysis and portfolio management system. This is the tool that we use here at VectorVest to help you guys analyze any of the over 8,300 stocks that we track. We're going to use that in regards to the stories, what's trending in the market, what news is trending in the market, what news is moving stocks. That's what we cover here in Trending Thursdays. So if you want to know what's hot and what's not, you're in the right place nonetheless. All right, so it looks like you guys are talking amongst each other. I'm going to let you guys talk amongst each other right now. That's the bad part about them seeing your type, because now they're not listening to me, Joey. They're just typing to each other. That's all right. We're just in a chat room. Now we're just in a chat room with a guy on camera. So that's what we've moved now over to. This is YouTube Live, but it's a chat room where everybody can drink coffee. I don't have coffee today. I'm drinking water, I'm not drinking coffee. But I still have my Duke cup, just so that everybody knows. There's my Blue Devils cup, but I'm not drinking coffee today. And there we go. All right, so as I take a little bit of water, hi Kathleen. Now everybody knows that I'm talking to you in YouTube land. All right, so let's get into it. The first thing that we always do is analyze the market. Let's start off there. So if you're, that's not the one I want. I want that one. If you're new to the VectorVest software and you haven't gotten, can we block Glenn? Wow, Jake wants to block me so you guys can talk amongst each other. Awesome, Jake. Awesome, Jake. I love this room. I love the camaraderie that we've grown and gotten to get in this room. So we always start off with what's going on in the market. This is the home page of the VectorVest software. In here, you're going to get a good feel of what's going on. By the way, Kirby said hi to Kathleen. As Kathleen just left Kirby. You're going to get a real feel of what's going on in the market. And this home page provides a lot of great information before you start to even analyze stocks. Let's start off with what's going on with our major indices today. Let me click this. We have a mixture in the market. The Dow is slightly down, but all of the other major indices are up slightly. The S&P 5 and 100 are flat to slightly up. The VectorVest composite, which tracks the movement of over 8,300 almost 8,300 stocks right now, the price of that composite is up 10 cents today. Looks like it's a big mover in the market, but the NASDAQ is even bigger, up about 0.6%. So right now we're looking at what we call a mixed market. The Dow is slightly down, but all the major indices are slightly up to flat. But nonetheless, that's where we stand. We look at our market timing gauge, which is indicative of the color guard, the top row of our color guard. I'll get to that in a second. Our market timing gauge is one tick into the green. The VectorVest color guard is mildly bullish. And what do we do right now? Huh? What? Nothing. Go ahead. What happened? Go ahead. What did I miss? Why did you do that and then say nothing? Joey and I are arguing. What did I miss? Fine, man. Go. Whatever. Great job. No, what else? I hate you right now because something happened and Joey's not telling me. We're one ticket to the green. The VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. Down below that, in the color guard, which tracks 3 of our market timing indicators, price, RT, and the buy-to-sell ratio. Price looks at the movement of the VectorVest composite on a week-over-week and day-over-day basis. RT is an indicator of the short-term price trend of the market. Is the market in an up or down trend? Below the value of 1, which is cast on a scale between 0 and 2, below the value of 1 is unfavorable. The market is still overall in a downtrend, but strengthening. The buy-to-sell ratio looks at the overall health of the market. Above the value of 1, the market is now showing more buy recommendations in the software than sells. The market is showing signs of strength. And when we look at these indicators on both the week-over-week and day-over-day basis, we assign tiles. When it's a yellow tile, it's mixed data. It's either up on a week-over-week or day-over-day basis or back and forth. So we assign a yellow tile. When it's green, that means that an indicator rose on a week-over-week and on a day-over-day basis, so we assign a green tile. Notice that 4 out of the last 6 trading days, the price column has had green lights. That is an indicator that it's okay to start buying stocks on that day. But overall, don't lose sight that we are looking at more yellow lights than anything. Use the color guard like a traffic light. more yellow than anything, slow down. Even on the green days, we have a green light in the color guard pricing column, it's okay to start dipping your toe in the water. Right now, the water's getting kind of cold, especially here in North Carolina. We woke up this morning to 37 degrees. It was pretty cold this morning, but it's going to probably go up to 80 degrees for the end of the day, by the end of the day. So it is what it is. But on the green lights in the color guard pricing column, it's okay to buy a couple of stocks. Don't back the truck up. But keep in mind, with all of the yellow, manage your trades a little closer. All right, so that's what we've got going on as far as from a market timing perspective. It's okay to dip your toe in the water to the bullish side. Don't go crazy. If you get stopped out of any stocks, wait for a green light day on the color guard pricing column before you buy any more stocks. All right? So keeping that in mind, let's start getting into what news is moving the market. Let's go out to my daily here. I'm on the wrong one. It's not the one I want. I want to start here. There we go. Do I want to click here? Yep. All right. So you know something, that this is more so a news-driven market, okay? This is more so of a news-driven market. You notice what we didn't talk about from last week to this week? China. There wasn't a lot of news about China because right now we're talking about what's going on in Syria and what's going on with the Turks and in Syria and the Kurds and all that kind of stuff. So globally, what's moving the market could be something that came out earlier last week, that Turkey, Russia start the clock on Kurdish withdrawal from northern Syria. So that was the big story from the news-driven side that could be moving the market. There again, there wasn't much about China this week, but that can change all of next week. So Istanbul, Turkish forces suspended their offensive in northern Syria, and Russian security forces began patrolling nearby under an agreement that gives Kurdish fighters 150 hours to leave what Ankara calls a safe zone in the war-torn country's north. All right, so instead of it being China, it's looking at what's going on in Syria. Let's go back into the software, and I'm going to open up my watch list of stocks. All right, all of the stocks that we're going to talk about, and before you say, holy smokes, that's a lot of stocks, they're going to be separated out. So the first two stocks that I'm going to look at are going to always be the spiders, the S&P 500, and the VVC, or the VectorVest composite. Most people use the spiders as a gauge to determine whether their stocks are going up or going down compared to what the spiders are doing on the S&P 500. And of course, we use the VectorVest composite as a means to see what's going on in the market, because this indicator tracks the movement of almost 8,300 stocks. So let's go right click. Let's go take a look at both of those graphs. So we're talking about the stories in Turkey. So as we look at the spiders, we can see the S&P 500 overall over the last year has been moving higher. Right now, coming off a most recent swing high. That swing high occurred on 9/19. Looks like we're approaching that level. That high in the spiders was sitting at 302.63. Right now, we're at 299.93. We do have a 20-day exponential moving average. The S&P 500 is above that 20-day exponential moving average. All right, so the spiders, or the S&P 500, is moving higher. Let's look at the VectorVest composite, which looks at more than just 500 stocks. It looks at the movement of about 8,300 stocks. It looks sort of like the same way. Its high on the VectorVest composite was hit on 7/24 at a price of $48.64. Right now, we're trading at a price of $47.77, but clearly above the 20-day exponential moving average. But I want you to keep something in mind. Coming off of that high, look at what the market's doing. All right, the market is trending lower off of that high. Let me draw that line a little darker. Trending off of that high. What I'd really like to see, even though we're above the 20-day exponential moving average, let's break above that downtrend. That would give more credence to this movement coming off of this level of support, moving higher. Let's break above that. Earnings on the stocks, almost 8,300 stocks, definitely moving higher. Volume is pretty steady. So those are the two indicators looking at overall global market activity. The markets are moving higher. Maybe the withdrawal for the Kurds is doing well for the market nonetheless. So let me close that, and that's what we're looking at. So let me see what comments you have coming in here. Does the hot stocks buy even when there's a confirmed down signal? And Mindy, what we do is normally when we have a confirmed down signal, hot stocks are gauged off of the primary wave. So even if we have a confirmed down call, if the primary wave is up, we're going to be looking at bullish hot stocks. When the primary wave is down, we're going to be looking at contra ETFs. That's how that works. Jake says, does the color guard ever change color to mauve? No. How about that? Straight up answer. Hi, Maria. I'm glad you're here. Saborium says, hi, good afternoon as well. Kirby says, yes, you did earlier in this week. Ed says, I like this form of video. It's great to see you on screen. That's why I invited you guys here, and I'm glad that you're here. All right, let's get to our next story. Where's the mouse? Stop messing with the mouse, Joey.
I'll tell you what to do.
Okay, Joey's mad at me. The next story is all about this is landmark stuff right here. 4 drug companies reach a last-minute $260 million opioid settlement with 2 Ohio counties. That's huge. So we all know the story behind opioids. These are drugs that doctors prescribe once you're in some pain. And the problem is a lot of these drugs are addictive, and it's gone on to reach epidemic levels with the opioids. So these companies without wanting to go to trial, there were 4 companies, without wanting to go to trial, they settled out of court for $260 million. Guess what? This now sets a precedent for other opioid companies to settle out of court or go to trial. If these companies didn't want to go to trial, that means there was probably a really good, strong case against them that they would lose, and probably lose a lot more money than $260 million. Now, if we scroll down, here's the 4 companies, Amerisource, Cardinal Health, McKesson, and Teva Pharmaceutical, and they fell short of a wider deal worth tens of billions of dollars to end all opioid litigation against them. So now, because they settled out of court, it doesn't look like they can be pursued anymore for any opioid litigation. Maybe smart on their part to say, listen, we'll shell out the money now so that we won't be, what's the word I'm looking for? They won't be responsible for a lot more money later. So let's take a look at these 4 companies. All right, let's take a look at these 4 companies. We'll go back into the software. And the 4 companies are McKesson, where's my next one? Cardinal Health, American Source, that thingy right there, and Teva. These are the 4 companies. Let's analyze them real quick. Now, especially for the people who are new, this is the value of having the VectorVest software right here. We can analyze any stock. First off, we give a value for every stock in our database. It's what we feel the stock is currently worth. We want to see if you're trading in a stock that's under or over its value. Our mantra is to have you in safe, undervalued stocks rising in price in a rising market. So McKesson, trading at 145, value 206, definitely undervalued. Cardinal Health, 49.46, 61.05 is their value, definitely undervalued. ABC, 85, value 117, undervalued. And of course, Teva, 813, value 1071. All of these stocks are undervalued stocks. Now let's get into what I like to call the meat and potatoes of analyzing the stocks. Our 4 core proprietary indicators all cast on a scale between 0 and 2. Relative value, relative safety, relative timing, VST, and our 5th indicator, I think I just went through puberty. My 5th indicator, which is CI, all of these indicators are all cast on a scale between 0 and 2, where above 1 is favorable, below 1 is unfavorable. Relative value looks at the stock's long-term price appreciation potential over the next 1 to 3 years. We compare it to a safe investment like a AAA corporate bond. You buy into a bond, after it matures, you get your money back with a little interest. What we're going to say is, would you rather own this stock over a AAA corporate bond? McKesson's got a relative value at 1.40, above the value of 1, favorable. Now, at 1.4, we're saying that this stock should outperform that AAA corporate bond by 40% over the next 1 to 3 years. That's a stock that I want to hold on long term. Cardinal Health, 1.22, should outperform that AAA corporate bond by 22%. ABC, 1.26, should outperform that AAA corporate bond by 26%. And Teva should outperform the AAA corporate bond by 24%. So long term, all four of these stocks are stocks that you do want to hold on to. Relative safety, it's an indicator of risk. Relative safety looks at the consistency and predictability of a company's financial performance. Layman's term, does this company meet or exceed earnings year after year, quarter after quarter? Above 1, the stock is more likely to meet or exceed earnings. McKesson, 1.05, safety is okay. It's favorable though, above the value of 1. Cardinal Health, below the value of 1. When earnings comes out on Cardinal Health, it may or may not meet or exceed earnings expectations. ABC above the value of 1 just barely as well. It should. And last but not least, Teva, the safety on the stock is not that good. It may or may not exceed earnings expectations. Now, RV and RS are our fundamental indicators. RT is our technical indicator. RT looks at the short-term price trend of the stock. Above 1, the stock's in an uptrend. Below 1, the stock's in a downtrend. 1.09 on McKesson, the stock is in an uptrend. 1.18 on Cardinal, stock is in an uptrend. ABC is in an uptrend, but it's in the slowest uptrend compared to the other 3. And Teva is in the biggest uptrend at this time right now. All right, so there you go. And then we wrap it up into our master indicator VST, which is the value, safety, and timing at 1.18, 1.11, 1.10, 1.11. The stock that's got the best combination of value, safety, and timing is McKesson. This is the reason why you look at more than one stock in the industry before you make a decision to make sure that you're buying into the best possible stock. This, in and of itself, is worth the admission to having the VectorVest software. All right, from this point, let's go look at the equity curves. The first one is McKesson, a lot more volatility on the stock. Huh?
Full size.
Full size. Oh, sorry. All right. This stock has got a lot more volatility going into it. It is above the 20-day exponential moving average, but look at the fall. Since it made its recent contribution to settle out of court, the stock's price is falling. Earnings, which we're looking at, is forecasted. It is higher than it was a year ago, but just keep your eye on it. Let's go to the next one, which is Cardinal Health. Again, you're going to see the same kind of thing happening to all 4 stocks. Since they all settled out of court, look at the pullback on the price. Now, earnings is pretty solid, right? Not moving. The stock is above the 20-day exponential moving average, but currently falling. Same thing with Amerisource, pulling back since they decided to settle out of court. But look at the earnings. This company makes money. This company makes money. Look at the rising earnings. Even with the pullback because of the settlement out of court, this company continues to make money. Keep that in mind when looking at that company. And the last one is Teva. Teva was the lower dollar stock out of all of them, so maybe it wasn't affected nearly as much with the pullback. Watch, the stock is above the 20-day exponential moving average. Earnings is higher just barely than it was a year ago, pullback, but starting to rise up again. Teva, for a lower dollar drug company, might be in good play as long as it continues to rise if the rest of the companies rise up as well. So let me close that out. Let me see what chat is coming in. Jake is long Teva. Teva is that lower dollar stock, Jake. It is above the 20-day moving average and moving up. So let's go just see what happens. Opioids, wow. So Kirby put some personal information about what happened with opioids. And guess what? It's not just the big drug companies to blame for those that chose to do. I hear you, man. But I think that this is a step towards going after what the opioids have done to a lot of people adversely. All right, so let's move on. Let's go to our next story. The next story is about Boeing. Boeing has been in the news, and I've been keeping you up to date on Boeing. Remember, I did a story in the Trending Thursday when Boeing is very confident that they will be up and running off the ground by the end of the year, by the end of December. The air people, the FAA, is saying, well, we don't quite know just quite yet. But Boeing hit with new industrial setbacks as the 737 MAX crisis deepens. Boeing Company said on Wednesday it still expects the U.S. regulatory approval for its grounded 737 MAX in the fourth quarter, December, sending its shares to higher despite a slump in quarterly profit. They missed earnings. The world's largest plane maker also said it was cutting production of its flagship Dreamliner, delaying plans to set up output of its money-spinning 737 line, and also delaying the arrival of its successor to the 777 Mini Jumbo. The fresh industrial setbacks heaped pressure on a newly rejigged senior management team fighting to repair trust with airline customers and passengers, shaken by an 8-month safety ban on its 737 MAX. All right, so that's one company in this. And this segment is going to be looking at the defense stocks or the defense companies, because Boeing is one of those defense companies. Even though it's the 737 MAX that's definitely hurting it, we're going to look at other stocks within this industry, like Boeing, that are in the defense industry. So let's get into the software. Let's go pull up those companies. We have Northrop Grumman is in that industry. Lockheed Martin is in that industry. Boeing, and I have one more. Which one do I have? I have General Dynamics. There it is. So all four of these companies are in that defense space. At the end, Raul, if I have opportunity to look at individual stocks, I will be more than happy to look at individual stocks for you, okay? So looking at Northrop Grumman, let's go. One, Northrop Grumman is undervalued. Lockheed Martin, undervalued. Boeing, undervalued. And General Dynamics, undervalued. So all of these stocks in that space that I'm looking at are all undervalued. Let's look at the upside potential long term. Northrop Grumman, I would own over a AAA corporate bond. This should outperform the bond by 46%. Lockheed Martin should outperform by 52%. Boeing should still, even with the pullback with the 737s, it's still got good upside potential, should outperform that bond by 41%, and General Dynamics 35%. Safety, all of the safeties are above 1. Northrop, Lockheed Martin, Boeing, but look at General Dynamics. Its safety is exactly 1. This tells me that when earnings comes out on General Dynamics, it pretty much has a 50% chance that it will meet or exceed earnings. The last indicator, is the stock in an uptrend? RT, the short-term price trend. Northrop Grumman, in a downtrend, below the value of 1. Lockheed Martin, in a downtrend, below the value of 1. Boeing, in a downtrend, below the value of 1. And General Dynamics, below the value of 1. Notice that all of the stocks in this space are trending lower. Northrop Grumman is trending down lower the slowest. It is the only one that is very close to the value of 1. Well, so is Lockheed Martin at 0.98. But General Dynamics, for the most part, is trending down the most. The master indicator VST, all of them are above the value of 1. The leader, though, is Northrop Grumman with a VST of 1.29. All right, so there you go. If I'm looking for, now Boeing is a great stock, undervalued, good upside potential, safety is good, in a downtrend. If I were looking for a stock in this space, most likely, though, it would be Northrop Grumman, and this is why we analyze stocks. Now, let's go look at their graphs. We'll right-click, view the stock graph. Here's the first graph, Northrop Grumman. Look at this. In the space, the stock is below the 20-day exponential moving average. Look at the big bump up in price today. Nice up candle, approaching the level of the 20-day exponential moving average. General rule of thumb, when any stock is above the 20-day exponential moving average, it's a great time to be in the stock. When it's below, it's a good time to be out of the stock. That whole industry has been hit, so maybe not a good time to be in Northrop Grumman right now, but right now, look at that. Where did the price, the intraday price stop? Where did the wick stop? Right at the exponential moving average. I would definitely love to see if we can break above that moving average before you pull the trigger. And that's right, y'all. This stuff really works. Love the earnings on Northrop Grumman, though, as well. Next stock, LMT, Lockheed Martin, also below the 20-day exponential moving average, approaching that level. Let's see if it can bump up against it and break through. Earnings, these companies make money. Look at the rising earnings on these companies. Woo! Boeing, well, Boeing got hit because of the 737, right? Look at that. Man, it missed earnings though. Here we go. And look at it trying to do a rebound. There's a candlestick pattern known as a hammer. A little bit of upcoming from there, but man, it's got to definitely break above that 20-day exponential moving average. And last but not least, General Dynamics, also below the 20-day. Notice that every single one of these stocks in this industry have great earnings. Just may not be the right time to be in it. So there is a bad time to be in a good stock. Earnings is the engine that makes the stock's price run higher. Right now, it's not the right time to be in it. Grumman, there isn't an R in the word. It is Grumman. It is, isn't it Grumman? Northrop Grumman? Or is it Gumman? Oh, I don't know. All right, let's close out of that. Let me see what statements you got going up in here. I'm gonna do what I can for you, Raul, as I explain. Is that it? VectorVest, Glenn and Joey, man, this stuff really works. I love that about you, Tom. All right, I wanted to see, it's Grumman. What did I say? Did I not say Northrop Grumman? Joey says yes. Joey says you're wrong, Jay. Okay, good. That's not me. That's Joey saying that.
We can put him in timeout if you want.
I'm not going to put him in timeout. No? I'm not going. No, I'm not going.
I can do it right here.
No, don't do it. Don't put him in timeout. Let's move to the next story. All right. Now we get into the stream war. We need to have a little something behind that. Now we get into the stream war. Can you do that?
You can do that.
Okay, I just did that. All right, so we've been talking about the stocks within the streaming space, and there is a war brewing. Everybody's going after everybody. New story. Verizon will give customers 1 free year of Disney Plus. So why is that important? Because last week, Apple TV gave rights to Roku to stream Apple TV on Roku. Now Disney is saying, well, we're going to take it a step further. Let's let Verizon give 1 year of Disney Plus service. Folks, the war is heating up like nobody's business. So Verizon is going to give customers 1 free year of Disney Plus service. It will give certain customers, so I wonder what certain customers are. 12 free months of the new Disney Plus service. The offering will be for all new and existing 4G LTE and 5G unlimited wireless customers and new Fios home internet and 5G home internet. So I guess that is for the certain customers. Now, let's go look at the stocks that are in that industry. We're going to start off with Apple is in that industry. All right, who else is streaming? Roku, where's Roku? Roku is right. There's Roku still. There it is. There's Roku. What else is in there? Netflix. Let's go bring up Netflix. There it is, right there. And let's go bring up Disney, which is right here. All right. And and there's Amazon. I am going to put Amazon in there because they have a streaming service as well. 1, 2, 3, 4, 5 companies are in this field for the stream war. All right, Apple. Actually, Apple is a tad bit over its value, probably considered more so fairly valued. Wow, 1781. Amazon, way over its value, but people still have the perception that it's a good company. Overall, it's making money, right? Disney, over its value. So these streaming companies, which have the perception of, hey, I'm moving over to streaming. A lot of people cutting the cable, right? And moving over to streaming, driving the stock's prices higher. A lot of these stocks are going to be considered to be overvalued. How about Netflix, 270, value of 135, overvalued. Roku, 131, and its value is $11, grossly overvalued. Now, let's go start real quick with relative values. Long term, probably you don't want to own Apple. As much as I love Apple, probably I wouldn't want to own Apple as compared to a AAA corporate bond. The bond will outperform Apple over the next 1 to 3 years. Now, on the other hand, Amazon, 1.32 on relative value. This stock should outperform the AAA corporate bond by 32%. Walt Disney is way down in the list. Look at that. So they're trying to ramp up going after who? Netflix. Relative value 0.70, where Netflix has a relative value at 1.15. The only two that should outperform the AAA corporate bonds are Netflix and Amazon. If we look at Roku, wow, it is way down there. Now, this is the first one where I want to look at earnings. Let's talk about Apple. $12.77, but they're not growing their earnings. They have a growth rate of 0%, whereas Amazon, excuse me, good earnings and growing their earnings at 33%. Any company that grows their earnings, that's exactly what you want to have happen. Look at Disney, good earnings, but they're growing it in a negative fashion, negative 5% a year, which is why they're trying to hook up with something like Verizon to bolster what they are doing. Netflix, positive earnings, growing their earnings at a clip of 26% per year. And Roku, negative earnings. The only one that has negative earnings, and they're growing it in a negative way. Roku doesn't make money. Roku, with the onset of Apple putting its streaming TV on the Roku box, should help to push it up. Way overvalued. Nothing really good going on with Roku, all right? So they're on the coattails of Apple trying to get busted up a little bit, or pushed up a little bit. Let's take a look at the graphs. Let's go view the stock graph. So Apple, love the equity curve on Apple. What I don't like about Apple is look at the earnings. If the earnings is the engine that drives the stock's price higher, falling earnings should do what? Pull a stock's price down. It is clearly above the 20-day exponential moving average, moving higher. Here's today's candle. Not the right day to buy today. It is a bearish candle. Let's go to the next stock, which is Roku. Again, Roku is perception. Look at the negative earnings on the stock. Look at the negative earnings getting more negativer, going lower and lower. Roku is an interesting animal in and of itself. Currently, it is above the 20-day exponential moving average, but pulling back. But look at the negative earnings. Be careful with Roku. And again, Apple may be the catalyst that may turn it around, but we'll see how that works out. Let's go to Netflix. Woo! Netflix is losing a lot of customers. All right, Netflix is losing a lot of customers to these other services like Amazon and Apple and Disney. All right, so Netflix is losing customers, but they're still hanging in there. Remember when Netflix was the only kid on the block? It was the new kid on the block. What was that? Back in something again. Was that the new kids on the block? All right, so anyway, stock's price is above the 20, moved recently below. Be careful with it. I love the earnings on it, though. Love the earnings on it, but the bleeding of the customers is going to hurt it. It's going to hurt it. All right, currently below. I would wait to see if it can get above the 20-day exponential before I went to buy it. Disney's trying to come after Netflix. All right, earnings, they're spending some money to put behind the Disney name and for the stream. They have a vault of stuff, though. They've got more content than probably all of the others put together. All right, just keep that in mind. Earnings per share is falling. The price is below. Look at the trend. But they're actively and aggressively going after Netflix. Just keep your eye on Disney, as we'll see what happens. Once it gets released, people may be cutting the cord and leaving Netflix and even coming over to Disney because they've got so much content. This is a stock definitely to keep your eye on, all right? I see the negative earnings, but the positive information that's coming out and the way it's going after Netflix could be the onset, and especially since we have a level of a low right here. Let's go see if that level of a floor can hold. And the last stock is Amazon. Well, they know, not only do they have the streaming, but the majority of their business comes from online sales. Actually above the 20-day exponential moving average. Love the earnings per share, but moving sideways right now. All right, moving sideways right now. A nice up day today. Let me close that out, and let me see what comments you have. Drug lord must own Roku as money laundry. Roku has never made any money. You're right, Tom, it hasn't. Why am I so negative? Why negative on who? Oh my gosh, what am I negative on? Sorry about my voice. I've been doing a lot of talking recently. Negative on who, Jake? Negative on who? Disney parks have higher revenues but lower attendance. Really? See, I haven't paid any attention to that. The majority of this is strictly about looking at from a streaming perspective. The stream war is heating up, and these are the stocks that are an important part of the stream war. All right, let's get to the next story. The next story is about some earnings that have come out, starting with Caterpillar, Chipotle, McDonald's, Procter & Gamble, Harley. All right, let's go take a look at these real quick. Caterpillar reports earnings that badly missed the street. Cuts forecast again. Caterpillar's been around a long time, though. Chipotle. You know what I don't understand about Chipotle? They make burritos, but it's almost an $800 stock. How do you become an $800 stock making burritos? Well, Chipotle, though, crushes earnings estimate, says accelerated drive-through plans may delay some store openings. It's going to be hard for them to do a drive-through. Have you ever been to Chipotle? You see how long it takes for them to make a burrito? Now, I'm sure the line moves fast, and it does. But if you're in a drive-through and somebody orders 4 burritos, a couple of burrito bowls, it's going to be tough trying to send that through to the drive-through. So just keep that in mind. Next one, McDonald's. McDonald's pulls back on promotions and earnings fall short. Shares down 4%. Interesting about that one because they've come out with the new burger that's supposed to be fresh and thicker, like the Wendy's burgers, never frozen. I thought that was going to be really good for them, but in this quarter it was not, and it pulls back on promotions. Procter & Gamble. Procter & Gamble earnings and sales top estimates sending the stocks higher. Procter & Gamble, everybody needs the stuff that Procter & Gamble has. Think about it. I don't know how Procter & Gamble could ever lose money because we all need toothpaste. We all need all of the stuff that Procter & Gamble puts out, right? So just interesting about that. But they did top estimates, and my last one was the hog. Harley Davidson. Boom, boom. Harley Davidson tops forecast as international sales improve, selling more motorcycles internationally. All right, let's go to my watch list. Let's go find these stocks. Caterpillar, Chipotle, Procter & Gamble, what's the other one? McDonald's. Which one? Am I missing one? Huh?
Check your list.
I'll check my list. Let me see. Earnings, Caterpillar. Yep, that's it. And I do want to put in the last one. Is Tesla in here? Tesla beat earnings too. I'm going to add, we'll just talk about that. All right, Caterpillar, undervalued. Chipotle, way overvalued. It's an $800 stock, and the stock makes burritos. Procter & Gamble, overvalued. Company's been around a long time, though, but the company only has got a value of $66. McDonald's, a little bit overvalued as well. Now, let's look at RV. The RV on Caterpillar is the highest out of all of these. This is the stock, again, it's been around for the longest time out of all, well, maybe not longer than McDonald's, but it's got a good upside potential as compared to a AAA corporate bond. Chipotle, above 1 favorable. Procter & Gamble, it's been around a long time as well. Upside potential is not there as much as I thought it would be. McDonald's is just below 1. Safety, out of these stocks, Chipotle is the safest stock with a relative safety at 1.42. Caterpillar's safety is below the value of 1, probably the first time in a long time with the longevity of the company. Procter & Gamble's got a safety of 1.26 and McDonald's at 1.29. Now let's determine which stocks are moving up. Caterpillar, even though it missed, it's still overall in an uptrend with RT above 1. Chipotle, RT below 1. Stock is moving down in price. Procter & Gamble, above 1 at 1.27. Stock's in an uptrend. McDonald's at 0.79. The stock's in a downtrend. Let's look at the overall ranking of VST, 1.22. Caterpillar's got the highest VST, followed by Chipotle at 1.16, Procter & Gamble at 1.14, and McDonald's at 1.04. Let's see if they make money. Earnings on Caterpillar, $11.96. They grow their earnings at a clip of 17% a year. How about Chipotle grows their earnings at a clip of 22% a year? Procter & Gamble loses 1% on earnings growth a year. and McDonald's grows their earnings by 5% a year. But how about that? Chipotle grows their earnings at 22% a year. Good, Gordon Ginn. All right, let's go look at the graphs. Right click, view the stock graph. I'm not going to do it on this one. Caterpillar. A lot of wicky-wacky, Loch Nessie, up and down, up and down, up and down. You wouldn't think that from a company like Caterpillar's been around for a long time, would you? But look at the trend, just looking at the freehand from the highs, connecting the highs. Look at that, folks. Overall, Caterpillar is in a downtrend. Well, you know what stocks compete with it? John Deere, Himatsu, or something like Hitachi. There's other companies out there that will compete with Caterpillar. Remember when Caterpillar was the big name out on the block? Not anymore, and Caterpillar is feeling it. Right now, at its downtrend line, let's see if we can break above that. That could be an insight of knowing, coming off of this low, can the stock break above that? That might be a good thing. All right, earnings, though, is falling. You always want to buy into a stock that's got rising earnings. Chipotle. Chipotle is moving up higher nicely. I like it right now, moving sideways in a little bit of a channel, in a little bit of a sideways channel. But overall, right now, man, Chipotle looks the best out of the stocks right now. Earnings per share definitely growing, and they're growing their earnings 22% a year. That's huge. Right now, I would wait. Let's see if we can get back above that trend line or on that moving average and possibly take out the one-year high. All right, next one, Procter & Gamble. I like this too. Nicely moving up above the 20-day, moving up higher. A new one-year high hit today. Earnings got hit for some reason right here, but now on a rebound. Again, Procter & Gamble, personal and cosmetics. Everybody needs the stuff that Procter & Gamble gives out, right, or sells. Look at that equity curve. That is a beautiful equity curve, along with this Chipotle equity curve. Let's go to McDonald's. Man, I don't know what happened here in the last quarter, but it was running up nicely, earnings running up nicely, pulled back a little bit. All right, earnings are still running up, pulled back a little bit. Wouldn't touch McDonald's right now, below the 20-day exponential moving average, 3 solid days in a row, even after gapping down. Why? Because it missed earnings. Missed earnings, popping down, and that's what happened. That's why you always look at a graph. I would wait on McDonald's. Definitely wait on McDonald's. All right, let's close that out. Let's see what comments you have. Glenn sings, that's not Joey's thing. Joey is a dancer and a lover. Oh, boy. Oh, Lord. I'm not going to read all of this. It can be Glenn Timkins in the Pip Show. You spelled my name wrong. Glenn, never mind. Just like Gladys Knight in the Pip. Oh, you said I was negative on the defense stocks, says Jake? Is that what you're saying? No. I'm not negative on the defense stocks. Some of them look pretty good. Actually, McDonald's bought a technology company to help with its productivity. That might help. They may need it. Glenn drives a moped. Really? I drive a big truck, as a matter of fact. I drive a Ford Excursion. That's not a moped. So there.
20 mopeds in there.
You could put probably 100 mopeds. You could probably put 20 mopeds in my truck. All right, let's go to the next story. So those were some stories on some earnings that took place over the week since the last time we met. And my next story is on Amazon. Amazon expands counters pickup locations. So Amazon, so this segment right here is going to be my retail section. And these are the retail companies getting ready to ramp up for the holiday season, starting with Amazon. Amazon expands its counter pickup locations. This just makes it easier for you to order online and have some place where you can pick up within the next hour or so. I think that that's ingenious on their part. And I was interested that why didn't Amazon buy, if they want brick and mortar, why didn't they buy the Radio Shack stores when they all went out of business? Those were nice. A lot of those were nice small stores. I think that that would have been great for Amazon to have for brick and mortar, but they didn't do it. But nonetheless, they still see the need to get closer out to people, so they are going to expand their counter pickup locations. Stamps.com, that's big as far as retail. Remember Stamps.com lost their contract with the Postal Service, and they took a big hit for that. But now, Stamps.com spikes after striking a deal with UPS. Now, even striking a deal with UPS, not nearly as grandiose the contract that they had with the Postal Service. In case you didn't know, the Postal Service is still the largest deliverer of parcels, by far. No matter if you're UPS, FedEx, put them all together. The post office delivers more. So when they lost the contract with the Postal Service, this may help them a little bit by striking a deal with UPS, so that's big as well. UPS also to test a drone delivery service applications with CVS. So you remember when Amazon said that they were going to do that? And I don't know how far they got with that, but now UPS is jumping on board with that. Listen, in this retail space, everybody's trying to get some of everybody's pie. They finally got a piece of the pie because they're moving on up to the east side. All right, so keeping all of that in mind, UPS is set to test a drone delivery service with CVS. I don't know why with CVS though. They're gonna just drop off drugs or stuff. I don't know. Anyway, that's big news. And last but not least, Walmart is ready to kick off the holiday deals early. So to go after Amazon, Walmart is preparing to start putting the deals out in the stores earlier than the sales that will go live on Amazon. Folks, this is going to be a hoitsy-toitsy holiday season, and that's why we now have this section called retail. All right, so let's go look at the stocks that are incorporated with this. Let's go see. There's stamps.com. Let's go down my list. Who else is here? UPS. Who else is here? On my Amazon. I already looked at Amazon. Stamps and UPS. Where's UPS? There's UPS, there's Stamps, and I think that was it that I really wanted to look at. Even though the stories were, we already looked at Amazon. Yeah, I'm going to leave it with just these two. So Stamp, a little bit overvalued, all right? And these are the two that are linking up together. Looking at United Parcel Service, though, it is undervalued. RV on Stamps. Remember, when they lost that contract with the Postal Service, they got hit. All right, so the upside potential started getting beaten up. Where on United Parcel Service, the upside potential is good. It's above the value of 1. Safety, though, remained okay with Stamps.com, with it being above the value of 1, as well as with United Parcel Service. RT does show me that with that kick, Stamps is now in an uptrend. UPS is not. It's got an RT below 1. VST favors Stamps.com up at 1.30, where United Parcel does have VST above 1, but not nearly as strong as Stamps. Let's go see. Stamps is making money, but when they lost that contract, they're growing their earnings at a -8. With this move with UPS, that number should turn from negative possibly to positive. And United Parcel Service is making money, $7.84 a share, and they're growing their earnings at 9% a year. Let's right-click, look at the graphs. Stamps, again, man, big hit when they lost the contract. They've been trying to recover. Earnings is falling. They've been trying to recover, but right now is trading above the 20-day exponential moving average. And let's go to UPS. UPS is moving, it's below the 20-day exponential moving average. It did gap down 3 solid days moving down, but earnings is moving up, which is a positive sign. Let's see if the stock can find this floor. Let's go find this floor real quick. Find the floor right about here. Good floor. Right about here, sitting at about 112.24. Let's see if it can hold that floor and then possibly move up. All right, that linking up between UPS and Stamps could be the catalyst for the both of them, actually. Let's see what notes you have here. Do you wear a helmet on your... Wow, Jake, you're getting mean. I don't like you right now. Jay says, I thought you were going to talk about Google and the quantum computer. I am. I'll do that real quick. I do have a story on that. Did I get rid of that story, Joey? I did. I'm going to do this real quick. Seeking Alpha. Googl. And this is how I find my stories. Alphabet. Google says, there we go. Google lays claim to quantum supremacy, has achieved a breakthrough in quantum computer research known as quantum supremacy, showing that quantum speedup is achievable in a real-world system and is not precluded by any hidden physical laws. You know what this is? This is scary because this means that a lot of the applications or a lot of the problems that were solved by computers with this whole quantum thing, They can do it in a lot shorter amount of time. And you know something? I'm afraid that right now a computer's going to come out and says, this is what life is about. Boom, and blow our minds. All right, you know, that's a lot far-fetched. That is very far-fetched. Google said it's developed a new 54-qubit processor. That sounds like it's super fast. That performed a target computation in 200 seconds, which would take the world's fastest computer 10,000 years. Talking about advancement, that's huge. Now, again, I don't know if I should be, I don't know if that should be great or if that should be something to worry about, but it's out there. They've achieved it, and we'll see what happens. And I am going to look at one more stock for you. Another stock that did meet, that blew earnings out, or that beat earnings today was Tesla. Let's go look at that. Overvalued, good upside potential. Safety is saying that the stock most likely will meet or exceed earnings. And with the move up today, RT is at 1.54. And earnings, and look at this, Tesla grows their earnings at 49% a year. That's huge. That's huge. Let's look at the graph real quick. Stock is moving higher. Watch the earnings per share. Stock is moving higher slowly but surely. Let's draw a freehand line connecting the lows. Definitely moving up. I do like that, but I don't like the earnings per share the way that they are. They are making money. But compared to not too long ago, earlier this year, earnings are going down. So the stock's price is moving up. It is barely above. Oh, look at the gap. There it is. Look at the gap up today. Very little price movement, though. All right, and a wick on both the upside and the downside. All right, there we go. That's the last stock. Thank you for putting Tesla up there. Terminator Rise of the Machines. Got nothing to do with this, Jay. All right, tell you what we're going to do. Let's go look at some stocks that you want to. I know I'm a little late. We had a lot of stories today. I tried as hard as I could to get them in a timely fashion. But any stocks that you want to look at, type them in. This is the time to do it. And I'm going to give you a few seconds to do that while I drink my little bit of water. Did you mute me? Wow, so they heard me drink my water. All right. Nobody's typing in stocks. I see one stock. All right. This is your time to look at it. I know you always want me to. If you don't put them up, I can't look at them. If you don't put them up, I can't look at them. HL, comma, Visa, comma. All right. Wow. Every time you come here, everybody, if you want me to look stocks, you should have them ready. MasterCard. Macy's, what's MasterCard? MasterCard, MA. All right. I forgot where it was. MA, comma, Twitter, TWTR, comma, OGI, comma, Boeing. We looked at Boeing already, Thomas. We looked at Boeing already this morning, today. We did a whole story on it. EMPH, one more stock. PDD, all right. And LK. After LK, no more stocks. All right, MSFT. That's it. No more stocks. No more stocks. They're done. No more stocks. All right, that's my Vegas voice. No more stocks. All right, here we go. Let's go look at these. You know, Jay, I said no more stocks, Jay. I knew Jay would do that. No more stocks. Texas Instruments. They also missed earnings, didn't they? I didn't put up every stock that hit or missed earnings. I put up some of the most popular ones. But Texas, I do know that Texas Instruments missed earnings. Look at the fall down, clearly below the 20-day exponential moving average. MasterCard is MA. I think I got that in there. I got MA in there. Hold on. Yeah, I got MasterCard in there. All right. Right now is not the right time to buy Texas Instrument. Let it soak in with that they missed earnings. Overall, it took a little dip in earnings, but earnings overall, the company makes money. I would just wait for a good opportunity to buy back into it. Love the equity curve over the last year. Waiting for a good opportunity right now is not it. All right, look at Hecla Mining. Gold. I still don't know if gold has had its run or not. It is moving higher if I'm drawing the lows. All right, draw that trend line. Gold in this stock is moving higher. All right, watch the earnings though. The earnings, I do like that the earnings just went from negative to positive. That's a good thing. The stock is trading right at a level of resistance. Let's see if the stock can get out of its own way first. All right, it's got to bypass this level of resistance. Make that a little light, I'll make that a little darker. Once the stock can get past that level, then you might want to consider getting back into it. Whoever gave me Heckler Mining, who gave me that? Audie, are you in the stock? Are you in the stock? And if you are you playing it off of this most recent low? And if you are, you're going to be happy once it breaks above that level of resistance. Once it does, it's got some good upside. Right now, though, that level of resistance at $2.08 is holding tight. Is holding tight. And again, you guys are putting in stocks. Don't put any more stocks. I can't look at them. I'm already over time. So I won't be able to look at any more stocks than the ones that are already in this list right now. But I like the idea of Heckler Mining right at resistance. Let's see if we can break through. If not, that level of resistance is going to hold and keep you in that area. So if you're in it, really would love to see if we can break above that level, Audie. All right, let's go to the next one. Visa. Love the earnings on Visa. Love the volume. Volume's pretty steady. Right now, the stock bounced off a level of support in that zone area. Let me move that up a little bit. There's more of it. Bounced off of that, and now where's it at? Breaking above that 20-day exponential moving average. Can you buy into it now? Sure you could, but I would rather wait to see if we can get above that high first. Let's go see if we can get above that high first, which is sitting at 187.05. So do you have some room if it breaks above and has some follow through? The answer to that is yes. And you can make some money up until, that would be your profit target. Your profit target would be at 187.05 if you got into it once it broke above the 20-day exponential moving average. Let's go to the next stock. MasterCard. Nice open day today. A little bit of a hammer formation here. Nice open day today. A little bit of wick at the top. A little bit of selling pressure. Where did the wick stop? Right at the 20-day exponential moving average. Let's see if the stock has the wherewithal to break above it. Love the equity curve. Right now, I wait to see if it can get above the 20-day. Love the earnings on the stock as well. Twitter was moving up. Earnings looks good. Big down day. Look at that. Wow. Wham. Fall down, go boom. That's what it did. All right. Not the right time to be in Twitter. I would love to see if it can start to fade this gap, though. That's the next thing I'm looking for. I can ride that gap up at least to where the gap started. I could use that level right there as a level of profit target. But, man, look at that gap down below the 20. Even before the gap down, it was below the 20-day exponential moving average. Telling you shouldn't have been in that stock long anyway. Let's go to the next stock. OGI or Organogram, healthcare marijuana. Man, marijuana has been beaten down, all right? This is one of those stocks that have been beaten down. It's pulled up nicely coming off of the low, but trading right at that 20-day exponential moving average. I need to see it break above that, and once it does, here's my next swing high. That would be my level of profit taking sitting at about $5. All right, so if I got into it, if it broke above and went up, I have a profit target sitting at about $5 before I get out of the stock. All right, Pulte Home, beautiful looking equity curve. I love that equity curve. Look at it. Look how nicely it stayed above the 20-day exponential moving average. A good way to gauge when you get out of a stock. Love the open candle today. Volume is higher than it was a year ago and still moving higher. Love the volume. That, my friends, is a good looking stock. Good Gordon gin. If you're not in it, 12 cents higher than the high, put in a buy stop order. But beautifully above the 20-day exponential moving average. Next one, EMPH was doing great until somebody on TV opened their mouths. Boom, it got hit. Now it's sitting in a channel. It's sitting in a channel between 27.77 and 20.13. Right now, until the stock can get out of that channel, I wouldn't touch it. Right now, below the 20-day exponential moving average, approaching a level of support, sitting at $20.13. Love the earnings. The stock is a great company. It's a great company, but right now, it's having a hard time getting out of this channel. Let it recoup itself, get out of the channel. It's got good upside potential once it breaks out of this channel, but it needs to do that first. Next stock, PDD, Pinduoduo. Love the earnings. Stocks price, big move up today. I don't know what happened. And you know something, for those of you who are new, if you ever want to look at a stock and say, man, that graph looks great, click on the news. It'll open up to a story. Let's go look down at the news. 1 hour ago, Pinduoduo IBD stock of the day breaks out to record high, to a record high in the buy zone. You can always do that from any graph in the VectorVest software. Big move up today. Love that. Would I buy it 12 cents higher than the high? Love the earnings, and the stock is hitting a new high over the last year. I would like that stock, but I got to buy into it as it's rising. I'd have to put in an order 12 cents higher than the high. What else is here? Oh, Luckin Coffee. Kirby, did you put that in here? Where's my water? Did you put that in here? Luckin Coffee. Above the 20-day, moving up. Let's see if we can take out this latest swing high. If it does, stock's got good upside to the high. The high is sitting at $27.12. Right now it's at $21.59. Let's see if we can bypass this level of the swing high, and if it can, let it go up. Hi, Ken. Ken is from Dublin, Ireland. My only thing that I got about Ireland is they're after me Lucky Charms. They're magically delicious. Pink hearts, yellow moons, orange stars, green clovers, and blue diamonds. That's all the Irish that I can do. So we'll keep it moving. Luckin Coffee, again, above its 20-day moving average. Up day today, a little bit of wick at the top, but good update. Let's see if we can take out again this most recent high. Last but not least, Microsoft. Nothing to see here. Moving sideways. Nothing to see here. Moving sideways. Love the earnings per share. Volume is pretty steady. Let Microsoft get out of its own congested area. It is above the 20-day exponential moving average, but when a stock is moving sideways, moving averages don't serve well on a stock that's moving sideways, but currently above the 20-day moving average. So that's all of the stocks that you asked me to take a look at. Let me minimize this and let me get here. Thank you guys for being here. All of that news that we talked about on all of the stocks, hopefully you found that useful. Maybe on some of the stocks that you're trading, it'll help you with those. And on some of the stocks that are in there that you might possibly trade, at least some of that news could drive some of those stocks prices higher. So we looked at retail stocks. We looked at streaming stocks. We looked at defense stocks. These are all of the things that are hitting the news, and we put together as a nice little storybook for you and looking at other stocks within those spaces to give you a better idea if the stocks that were in the news, if they were the best stocks in their prospective industries. We always like to take a look at the best of the breed, and that's what we did today. So with that, thank you for being here. Remember, like, share, subscribe. If you like what you saw here, like it. If you're not subscribed to the channel yet, please do that. I'm trying to grow the footprint in the YouTube space. You're gonna help me to do it. Like, share, but biggest thing, subscribe. And once the video is posted, post comments on the videos, please. And if you post anything to me directly, I will personally try to answer. And again, the purpose behind doing that is if a non-VectorVest subscriber watches the video and likes the video, I would love for them to see what you've got to say about VectorVest. And if there's things that you want to see happen in VectorVest, put them in the comments. Please do that. Comments go a long way in helping people make a decision in regards to the software. So folks, put your comments in, subscribe to the page, man, all that stuff. Like, share, and subscribe. Do it. Just do it. Especially help to support what I'm doing here. We want to grow this space, so do that for us. All right. And with that, folks, I want to say adios, arrivederci, ciao, au revoir, sayonara. I'm going to see many of you tomorrow. Later.